Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, so today is Friday, March 16th or March 17th. We are going to do a foreclosure update. We haven't done one of these in a few months, but we have now we have a really good resource for getting foreclosure numbers. It's pretty much real time, about as real time as we can get. Unfortunately, because these numbers are collated by government, it takes like 6 weeks after, or 5 or 6 weeks after the month the last things were filed for them to actually post to everything, whatever reason. So this is the most up-to-date information we can get. Okay, so there is a contention out there that foreclosures are going to crash the real estate market because now interest rates are too high and nobody can afford their house, right?
So interest rates being high has nothing to do with people who already have mortgages, because those mortgages tend to be at a fixed rate. So they tend to be I think it's like 72% or something like that, are under 4%.
72% of all people who currently have a home loan are under 4%. Remember, 40% own their homes free and clear. So like 85, 90% of all people either own their home free and clear or have a loan under 4%.
Right.
Anecdotally, I talked to an investor the other day. Of all of his homes, even investment homes, the highest rate he has on any home is 3.25%. Okay, we're going to get back to foreclosures. Okay, first of all, I want to set the groundwork for everybody that doesn't understand the process of a foreclosure. Okay, a person they miss a payment. They just say, I can't afford my house anymore, and they don't send their payment in. Talk about the process that happens after that real quick, because we have a bunch of slides to go through with all the data, but I want to get everyone understanding the process here.
Right. So it's not like you miss a payment and the next day your house is foreclosed, right? You miss a payment, they send you a letter. You miss another payment, they send you another letter, that kind of thing. At some point, they do what's called a notice of default. Now, that notice of default, you have to be delinquent for at least 90 days before they will do the notice of default.
Okay. Minimum. You have to have missed 90 days of payments.
Right. So that's at least 3 payments. That doesn't mean that they do it right as soon as you miss the 3rd payment. They might do it after 4 or 5 payments. They might do it after 3 payments, whatever. So after at least 90 days of missed payments, then there's a notice of default, and then you have time to cure that.
Well, in some places like Nevada, they can't do anything until they go through this mediation process, like this mitigation process. They can't just go file it. They have to, you have to go meet with a mediator. They have to try to resolve it with the bank, right?
Right.
Okay.
Now, so in all fairness, the mediations usually don't produce much.
Right.
But they can. I mean, let's say that somebody missed a payment because they had, some life event, and then life is back on track. Then they go to mediation. They'll agree to get current in the next whatever number of months, and then life is grand and everything moves on.
Or they get a loan mod. They say, okay, we'll just, we'll change your payment to this. We'll give you 10 more years on the back end, and you just start making your payments again.
Right.
Okay. Notice of default's filed, let's say, worst case scenario.
Right.
But that doesn't mean the house is foreclosed. That's just part of the process.
That's just
part of the process. So what happens next?
So after the notice of default is filed, then more time passes. And then they have to file what's called a notice of trustee sale. Now
it's 90 days in Nevada.
Right. So now we're about 180 days at least into this. So now they file the notice of trustee sale. That happens about 28 days later.
Here in Nevada, it's exactly 28 days.
And so 28 days later, if nothing has happened in that 28 days, meaning if you haven't resolved it with the bank in any way, then the house does go to trustee sale. Now, so we're into this about 7 months at this point, and that's if everything goes right on time, if there are no delays in the process. Chances are that there are delays in the process, particularly with mediation and that sort of thing. So it does take a while. So the point is that foreclosures are not overnight.
Okay.
There's plenty of time to either bring the loan current, sell the house. Because remember, if you sell the house, the loan gets paid off. So since the loan is extinguished, there is no foreclosure. So there's plenty of time to get this all squared away.
Okay. So what we're going to do is we're going to look at the last decade of foreclosure activity. This is every month. So this is every month for a decade. This is for the city of Las Vegas, but I do have Clark County numbers, okay? We're just going to talk about the city of Las Vegas. Okay. On the left is that first one, notice of default. if you look at that, now these scales are different. This top of the scale on the left is 2,000. The middle scale is 400, and the next one's 300. They were averaging for Las Vegas back in 2014. Now remember, 2014 was not the peak of foreclosures. If this had gone back to 2000, 7, 8, 9, 10, it would have been off the top of this chart, this 2000, okay? This was the tail end when there were still some residual foreclosures. They were having about 500 NODs a month, okay?
Notice of default.
Notice defaults a month. That is a little higher than what normally you would have in foreclosures, okay? And then, and if you go all the way to the right, you can see at about just after 2000, it's like 0, and it's gone up a little bit. That up a little bit is what was freaking everybody out. Oh my God, look at foreclosures are rising like crazy. No, they went from 0 to 1. So they basically ticked up because they're trying to get back to a normal level. If you go to the next one, notice the trustee sale, you lose about half of the people that get an NOD filed over 90 days. They don't ever get a notice of trustee sale filed. Why is that? What happens in those 90 days?
So the problem gets resolved, like I said, whether the people work out a deal with the bank, whether they bring the loan current, or the property is sold. Any of those things can happen, so they never get the notice of trustee sale.
Okay, then you get to the trustee deed. This is the actual foreclosure sale. This is the date. One of two things can happen at the trustee sale.
Either an investor purchases the property or the bank takes the property back.
Okay, so it reverts back to the bank ownership based on if the house is worth $300,000 and the bank says, well, the note is $400,000, we want $400,000, no investor will buy it, and the bank owns it again.
That's
or right. If the bank says, it's worth $300,000, we'll just take $250,000 and be happy. Some investor will go, I'll take it for $250,000. They put down their cashier's checks, they get signed over the thing, and they can go take over the house, do what they want with it. They can move into it, they can rent it, they can flip it, put it on the market, do whatever, right? Okay, as you can see, those numbers are pretty low. Every one of those little tick marks is a month. So what we're going to do now is we're going to zoom in on the end of that, the very end of that. This is the foreclosure sales for the city of Las Vegas by month, all the way to the beginning of 2022. Now, this is the actual sale. This is the sale that happened, okay? For January, we had 12. For the month, 12 foreclosures. I have a slide that shows the total number of housing units in Clark County.
So what you have to understand is January has 23 business days. So, actually 22 because it's got the holidays in there. Or 21 if you count Martin Luther King. So it's got 21 business days.
Yep.
So in 21 business days, they managed 12 foreclosure sales. So that's what, like one every other day?
It's one every other day. It's not, when we were down there during the peak of the boom, we were down there flipping houses. It was at least 80. There were 80 houses. The parking lot was full of investors there were hundreds of millions of dollars in cashier's checks sitting down there. Everyone had a concealed weapon, and everyone was bidding on all these houses because you could get them at 30% of the market value. We're talking, there's zero activity. There is no foreclosure activity. So the people are saying, the foreclosures, they're getting ready to come. They're not getting ready to come. They're not happening. And if you say, but they're getting ready, okay? Wanted, let's talk about that really quick because I have another super good slide I want to show everybody. I'm going to leave this slide up so you can just kind of peruse the numbers here. There has been no level of foreclosures. The foreclosures have not been happening. What about the people who said, but Todd, they already foreclosed on them and they're sitting on them waiting?
So we know they have not because the slide that you have up shows actual foreclosures, right? So these are the actual numbers of houses that have either gone back to the mortgage holder or have been sold to investors. So we know that they have not been foreclosed. Now, for those of you who say, well, but they're getting ready to. Well, not quite, because remember we looked at the notice of defaults, and the notice of default didn't show that either. So those are kind of the two big metrics. Now, for those of you who say, well, they haven't filed, but there are lots of people in default. Not quite, because these are federally regulated banks, and they would have to show up on their books as non-performing loans. So that's not the case either.
Yeah. The last slide is really the telltale slide. It's very interesting. We have some more data too. I spoke with a agent who Their whole brokerage, their entire business model is, they've been doing this for over a decade. They buy at the trustee sale. They flip the house. That's all they do. They're trustee sale flippers. That's like 80, 90% of their business. Called yesterday, we had this conversation. I said, hey, how's it going, trustee sale? We haven't been there in a couple years. Oh, really? Why not? Zero, there's no activity. There's nothing down there. Like literally one or two things will come up. It's not worth our time to go down there for the one house that might come up, and there's a couple people bidding, and it maybe the bank's going to take it back, but I can't get anything at the trustee sale. So we're now just finding other ways to try to find inventory to flip it. And we're doing other things that has nothing to do with flipping houses. We're doing property management, yada, yada, yada. So there is no foreclosure activity in Las Vegas, and there's no pre-foreclosure activity, okay?
Right, but there are lots of we buy ugly houses kind of enterprises. There are lots of them out there. I get text messages from investors that I've worked with every day, and they're probably, without exaggerating, there are probably at least 60, 70 of them out there that are working Las Vegas full-time. They're working it hard. And so these people are absorbing any of this inventory that could go to foreclosure because they can close quickly, and they're buying these houses from the people, which means the people are not getting foreclosed, they're getting money in their pocket, and they're selling the property. So the idea that we're going to have foreclosures really doesn't make sense, because the only way that would happen is if these people that are buying houses off the market would not buy these houses. But if the numbers work, they will buy them.
Okay, so Juana, let's do a quick scenario. I'm an I buy ugly houses person. I put an ad out and somebody calls and says, hey, look, I'm behind on my payment maybe, or I just want to get out of the house. I want to sell it for cash and go. And then I go over there and I go, sure, I'll pay $350 for the house. And I go, that's fine. I'll just take it, right? The cash. We close a week later. What do they do with the house, and how do they then resell the house to get their money back?
So those investors will do one of two things. They will either do cosmetic renovation and rent out the house, or they will do cosmetic renovation and put the house in the MLS and sell it. Now, the reason I point that out is because that would add to the MLS inventory. That would add the inventory available for everyone to purchase. But we're not seeing a whole lot of that because the MLS inventory numbers are really low.
Okay, this is the Southern Nevada foreclosure. This is for the entire county. This is Las Vegas, North Las Vegas, Boulder City, Mesquite, Henderson, everything in Overton and all these places, the entire county, okay? If you go to notice of defaults over to the left, the entire last 12 months, we had 2,579. This is 12 months. We were having 300 to 400 a day being filed in 2007, 8, 9. NODs a day, 300 to 400 a day. This is literally less than 1% for the year, right? Compared to what we had back then. Then you can see when you go to notice trustee sales, half of those drop off. So we get, and this is 90 days later, we get down to 1,200. And then if you jump all the way over to the last column, which is actual foreclosures, these are the actual things. We have 511. And you can see for Las Vegas, it was 140 for the year. So that's, like Juana said, it's like one every 2 or 3 days. There's no foreclosure activity. There's no pre-foreclosure activity. It would show up in the notice of default. You would see a big number there. We're not seeing big numbers at all. The January NODs filed were like 120. Right. And remember, we're going to lose half of those 60, and then we're going to lose half of those, right, and get down to 50. 30.
So the thing to keep in mind is we're in a totally different situation than we were before, because now we have all of these investors that are purchasing these houses on the front end, right? They're not waiting until they go to trustee sale so they can compete with 80 guys. They're doing it on the front end when the people are either getting behind or whatever's going on, and they're trying to purchase them then when there's less competition, because these people maybe have 4 or 5 people looking at the house and giving them an offer for the house. There aren't 80 people down at the trustee sale bidding on the same house. So it's a different dynamic. It's obviously much better for the homeowner because they don't get foreclosed, their credit is protected, and they walk away with some money in their pocket.
Okay, here's the magic numbers. Go back. This slide's still up. Go back over to the 511. They're in all of Clark County. There are 769,000 total living units. Now, this does include like a fourplex, which would count as one unit, even though it has 4 people in it. And it also would count like an apartment building as one unit, even though it can have a lot of people in it. So that's why that 769,000 units can hold like 3 million people, right? Plus some houses, I have the family with multiple people in it. But it's predominantly homes, condos, townhomes. That most of that number is homes, condos, townhomes, right? 769,000. And in a year, you only have 511 foreclosures for the entire county. Now, here's some fun numbers. Historically, nationally, in a year, 0.7% of all homes get foreclosed. It's a little less than 1 in 100. And if you think about it, that makes sense. If you had a neighborhood of 130 homes, on average, in a year, 1 would get foreclosed. Now, during the boom, the foreclosure boom or bust, however you want to call it, you would see like 10 or 15 in a neighborhood would get foreclosed. It was substantially higher. Okay, ready for this? Remember this number, 0.7%. Okay. Currently in the U.S., the rate of people who are behind on their mortgage. Remember, this is the first step, being behind. And remember, we talked about this is you go from being behind, and then that gets cut in half, and then you notice a default, blah, 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 blah. Nationally, 0.67%. So even if every single person that was behind on their mortgage, which is not going to happen, that they all get foreclosed, every single one, and this is today's numbers, 0.67%, there's still going to be less foreclosures. And this number, this 511, is 0.07%. So we have 1/10 of the normal level of foreclosure and pre-foreclosure, because that notice of default is pre-foreclosure activity. We have 0.1%. So when people go, oh, but the numbers went up 40%. Yeah, because it went from like less than 0.1% up to 0.1%. This is literally, if you believe the bank foreclosures are getting ready to come because interest rates are high, we're not seeing it in the numbers. And we will see the notice of defaults, and even then it takes 7+ months before we start to see any foreclosures.
Right. And delinquencies are definitely something that banks do publish. So we would see it even before we would see the notice of default.
Right.
So those are our numbers. This is what's going on. Happy St. Patrick's Day.
Yay! When is that? Tomorrow?
That's today.
Oh, it's today. It's 17th.
Happy St. Patrick's Day.
It's early in the morning here. We got up at 5 to film this.
So it's Green Day.
It's Green Day.
Wear something green.
Oh, I didn't.
There you go. Hope you're having a good day. Please leave us some notes. Please subscribe, hit the notification bell, like the video, share the video, and we'll see you in the next video.
Bye.